What's up, everybody? Welcome back to the channel. It's the Random Investor, and I hope you all had a great weekend. I did a video yesterday, right? And I told y'all I would get back to you with an answer as far as what Japan classified XRP as, and also I want to I also mentioned something about the reverse carry trade, and I know not a lot of people know what the carry trade is or what the reverse carry trade is. So I think I'll just give you like a explanation of what it is so you have a better understanding, right? So, so what Japan classified XRP as, so let's start with that, right? So Japan officially classifies XRP as a regulated financial product under the Amendment Financial Instrument and Exchange Act. Right? This moves XRP out of the standard crypto asset category under the Payment Services Act, place it, placing it on par with traditional financial assets like stocks and bonds. So what does this mean, right? So it says this regulatory reclassification subjects XRP to stricter oversight, including enhanced disclosure requirements, market manipulation protections, and insider trading bans. It is also part of a more broader push to treat these digital assets as recognized investment grade assets rather than just speculative payment tokens. So did y'all hear that, right? So they classified it as a regulated financial product. And this was Japan. So, and I'm pretty sure that Japan is not the only one that are making these moves to recognize uh, cryptocurrency as regulated financial products. So if they're doing this, right, what do you think that they're implementing these regulations for? Is it just for the benefit of their own good, or is it for something much bigger? So you just got to think about that. Because I know, like, from reading that, like, it even add more confidence to like my strategy right now. So yeah, I'm just letting you know, use this information wisely, whether you seize the opportunity or you just let it pass you. Okay. So the next thing is the carry trade, right? So let's get to this article. So the yen carry trade is a financial strategy where investors borrow Japanese yen at very low interest rates and convert it to another currency like the US dollar to invest in higher yielding assets, profiting on the interest rate spread. And if an unwind happens, an unwind happens when this trade reverses, forcing investors to sell their global assets, buy back yen to repay their loans, and rapidly triggering global market volatility. So pretty much the carry trade is so just think about you going to a bank, right? And they're giving you a 0% interest loan. And then what you're going to do is you're going to take that loan and go to another market or that and buy and invest into other products at a discounted rate. So you pretty much getting an interest-free loan, and you're using that money to go invest into whatever it is that you're invested in to maximize your profit and your return on investment. So if the unwind does happen, now all these people have to sell all the investments that they done made in order to pay back this loan to Japan, right? So, and the way the unwind would happen is if Japan, if like global crises and stuff put major stress on the Japanese financial markets and economy, that it will force them to raise interest rates. And if you look it up, they have started to increase their interest rate slowly. but I don't know if like I don't know if they don't want to do it, like raise it too quickly to trigger the unwind of the carry trade, and then like everybody blames Japan for uh, forcing the markets to crash, right? So they're doing it very methodically and making sure that it doesn't happen too quickly. So pretty much when the strategy unravels, it often triggered by the Bank of Japan raising interest rate or the yen suddenly strengthening. It creates a massive cascading feedback loop across the financial system. Global equity sell-offs, right? Because many of these borrowed funds are used to buy high growth or momentum stocks. See, pretty much what I was saying. You take this interest-free loan and you go invest it. Um, Unwinding forces investors to dump these assets. This can cause sudden sharp declines in major indices like the S&P 500 or the Nikkei 225. Surge in the Japanese yen as traders rush to exit their positions. They are forced to buy yen to pay off their original loans. This sudden spike in demand causes the yen to appreciate sharply against other currencies. While risk assets plummet, capital often flees into safe havens, which initially can drive up US Treasury prices. However, as foreign investors liquidate US fixed income holdings to, oh, man, I'm going to butcher this word right here, repatriate funds, it can put upward pressure on long term global borrowing costs, right? So if the carry trade unwinds, oh man, y'all are gonna witness a massive sell off in the stock market. Which is why I said right now I am not messing with the stock market right now because like I said, it's already at all time highs or close to being all time highs. I know a couple months ago, SPY was sitting at like 750. There's been a little pullback right now, but it's still pretty high. And yeah, I'm not playing with the stock market at all time highs. So if you want to, that's your choice. You could go take that risk and bet on yourself if you want to do that. But if I was you, I wouldn't do it. And that's just my opinion. Um, so yeah, but so what's like possible solutions, right, for the carry trade? So if this does happen, I'm not gonna say if, but when this happens, right? Potential solutions is for them to implement 24/7 programmable liquidity, right? So automatic settlement, executing the foreign exchange swap simultaneously so neither leg of the trade can fail independently. So during a high-speed yen carry trade unwind, traditional payment architectures like the multi-day CLS bank settlement cycle face immense liquidity strains. Implementing automatic settlement system eliminates the time gaps that expose financial institutions to severe counterparty default risks. So what do you guys think that they're going to use to to for instant settlements? What technology are they going to use? Is it obviously blockchain because blockchain it's a 24/7 market, not blockchain, but cryptocurrency is a 24/7 asset um asset, right? So it's all you could buy, sell at any time. It's never closed. So that's what they're going to do. They're going to utilize these technology for instant settlements um, of stock market um, and financial institutions, right? So you have to start positioning yourself. That's why I said do some research, whether that's based off the information that I'm providing you, and you dig it, use this information and do some further research and start positioning yourself in like the assets that they're going to use in order in order to achieve instant settlement, because I'm telling you, they're not making all these regulations and and doing all this legwork for digital currency, uh, just just for the fun of it. I'm pretty sure this is for something big, and don't let this opportunity miss you. But that's all I got for you guys. So, like I said, if you like the information that I'm putting out, remember to like, comment, share, and subscribe. And don't mind the boxes back there. So I'm still unpacking. I just recently moved, so I'm still unpacking and stuff. I'm getting set up. So I appreciate you guys coming out, and thanks for checking out the video.